Welcome to the Investment Markets Overview for the week ending the 16th of December 2022. As we put the investment markets overview to bed for another year, it's time to reflect on what we straplined 2022, the year of change. Highlighting why this overview is so different to most other market analysis. By exposing the facts from the fiction. Starting with perhaps the major investment myth of all. That central banks control interest rates. As three major central banks, the Federal Reserve, the Bank of England and the ECB, hiked their respective base rate this week, we confirm once again that none of them have ever made a proactive decision in their collective lives. They react to market rates, as demonstrated within a chart of the 3-month dollar US LIBOR rate against the Fed funds rate. Just why professional investors and economists alike pore over dot plots and central bank statements frankly beggars belief. Just watch the market rates which are controlled by investors and borrowers. The overview includes the performance statistics for the main stock indices, which were lower across the board, as were the cryptocurrencies, led by Doge's 22% slide, whilst sovereign bond yields and the commodities covered were mixed. Meanwhile, the regional coverage expands on another market myth, that real assets, such as houses, are a hedge against the stock market, and that the price of natural gas or the Ukraine conflict are the cause of UK inflation. Whilst out east, there is more on China's floundering housing market. As the investment markets wind down and participants focus on the season's festivities and quality time with their friends and family, the crystal ball gazing has commenced for the 2023 market prospects. You would imagine that after a 19% slide year to date for global stocks, that professional investors would be somewhat hesitant to remain so bullish. Yet an informal survey of 130-plus fund managers by Bloomberg News reveals that a whopping 71% of those surveyed expect a year of gain, with the average expectation of a 10% return. Meanwhile, retail investors continue to buy the dip, as the mantra that you cannot time the markets lives on. Despite ample factual evidence from this column that you can. Follow the link and treat yourselves for 2023. Season's greetings to you all, as we end with a new strapline for 2023. The year that reality sets in. A final performance table for the major stock indices since the year 2000 concludes the investment markets overview. We strive to turn the technical into plain-speaking observations, backed up by factual charts and context. Join us for a guide through the maze of economic and market data via the weekly 5-page overview published at least 40 times per year. Just follow the links provided for the overview and the latest investment timing solutions provided.